This is the Investor Mindset Podcast.
Because you're known as one of the people who not only can offer amazing investment deals to your investors, but you happen to raise that money for a very affordable or a cheap price.
Yeah.
And so I'd love to really dive into, how do you go about doing that? And how does somebody who's just getting started investing need to start reshaping the way they think about raising capital?
Well, just like my book says, copy your way to success. Everything that I'm teaching you now, I've learned from somebody else. Okay. But I just put it into practice. So really to learn how to raise private money, actually, I fall back on what Edward Jones taught me. I worked for Edward Jones, the company, and really they taught me all about money. And so let's think about money for just a quick minute. Where do most people invest? Okay. So if there's different ponds to fish in for investors, and different investors have different expectations. Okay. So I hope, there's your smart money. What I call smart money is Wall Street money, big REITs, big capital. In other words, the guys that have money and know they have money. Okay. That group or that pond is very expensive, yet they can make it rain quickly. So that's a tranche of money that you could look to and say, hey, if I got a deal, that makes sense. I, on the other hand, said, man, I don't want to, because that money usually comes at a price. And usually it comes with a price of giving up control. See, money makes the rules most of the times, right? The money, that's like if you go get a private hard money loan, the hard money lender's telling you what the rules are. And I break out of the mold. I hate conformity. I hate playing by the rules of other people. I wanted to create my own rules. And so then I started looking at, is there any other ponds of money out there that are not expecting 20% plus rate of returns, like that smart money? And what I realized when I look back at my financial advisor career, people that are in the stock market do not want as much return. They're actually settling for a lot less. As a financial advisor, I was trained to, when I was looking at someone's portfolio and looking at their whole thing, and I wanted to diversify them, we're telling them if they can get 6 to 8%, they are winning. That's a solid return. And that's the expectation as a financial advisor that I'm setting for my client across the table. So 6 to 8% money, that's pretty cheap, right? And that's what most people are getting that are in mutual funds, stock, bonds, mutual funds, all that jazz. And because that's what their brokers telling them this. Now, you got to understand too the mindset of a broker or someone selling these investments. Why don't they say 12% or more? Because it's very hard to hit. And if they don't hit it, the money leaves the house, which is the worst thing that can happen if you're a financial advisor, is money leaving the house. Everybody wants what's called their 12B1 fees. And so when I look at that pond of people that are expecting 6 to 8, and what I've taught is in my investments that we usually make when we make our PPMs, we do a total of return of 12%. We pay them usually a 6% pref and 6% on the back end upon the sale or disposition, annualized for the amount of time they've kept the deal. So we call it 6 and 6, which is 12% total return. But if you're at that 6 and 8% in mutual funds, 12% is like winning the lottery. Yet, if I was to throw 12% to that other pond of smart money, they'll laugh at me and say, haha, good luck, right? You can never do that. We'll never take it. And so I just chose to fish in the right pond of people that are in the stock market. And guess what? There's trillions upon trillions, and it just went to half, by the way, in the last, what's happened with the market, right? All that money is now divided by 2 almost. Hopefully it comes back. But people are looking for alternatives to the stock market. And that, my friend, is really what I've decided to do is through our apartment investing, we provide some solutions that a lot of people are looking for. So the first thing that we provide is income. I always believe that no matter what when you're selling your investment, your PPM for your apartments, what you're selling first is the first thing I think that most people are looking for in that retirement phase of their lives. Because most of my investors are a little bit older, right? They've saved up some money, but they're really looking for an income stream. So you want to be selling an income stream to your investors. And so we provide a 6% pref. That's what our pref means, is before we get any money, we give you a pref, and we pay it quarterly. So now let's break this down. If you got a 6% pref and you give us $100,000, that's really $1,500 every quarter. Okay. Now that doesn't seem like a lot of money, but it does when you put it on the other end to the investor that was in, like, when someone's in retirement, do you think they're looking at 6 to 8 or probably a lot less? Because most of the time when they switch to closer to retirement, most of their money is not now in the stock market because people are scared. And their worst fear is running out of what? Money. Yeah, no one wants to run out of money. And so, but they need a paycheck. And what the market is really not good at doing is providing consistent paychecks to people. So we solve that by selling income first. And so if you can, when you look at your deal and you can start providing a consistent paycheck every quarter to your investors that they depend on, see, people can budget on a quarterly payment, and especially at 6%. So if I was to ask you, hey, what investment out there in the stock market can you get that pays 6% and pays every quarter? What investment is that? I'm telling you, it is hard and probably almost damn near impossible to find, right? And so that in itself is so I sell just that, and really I sell it hard. And then I say, but guess what? There's more. There's really more, because we're paying you a 6% pref based on the profit of the deal. So, apartments are truly like factories. They take in rent checks each and every month. It goes to their factory, goes through the grinding process of paying all the bills and all the things to upkeep the property, and it spits out profit out the back door. It's that profit that we then give back to the investors. But guess what? Tenants expect rents to go up. And honestly, we never disappoint them. Okay? So we're always raising the rents, even if it's like $10 or $15, every year, every lease renewal, we're going to start raising the rents. As we raise the rents, we create more income, which makes our property more valuable. And when we do this, our value goes up. Then we sell it 5 years down the road. Now we've created another windfall of money to give back to our investors. And that's that other 6% that's annualized. And so for them, that's like icing on the cake. Because what they really count on, honestly, is the paycheck. The paycheck's what they want the most. Anything else in their mind truly is extra, right? So when you can give people a 12% return like that, and you set it up in a way that they can understand, and then you fish in the right pond, dude, it leads to a lot of success.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.